Hey Bowtie Nation, Joseph Hogue here with a video a lot of you have requested, one that could be your best long-term return over the next decade, but also one I warned against just a few months ago. In our December 22nd newsletter, I covered the potential in quantum computing with Google's Willow chip breakthrough, but looking into the stock said they were just too damn expensive to own. There I used Regetti Computing, ticker RGTI, as an example, up 600% in 1 month, but trading at a mind-numbing 100 times price to sales. I had previously highlighted shares of Ionq as one of Amazon's biggest bets on December 6th, but like the rest of the quantum computing stocks, with its 54% run in less than a month, it was also just too expensive, trading at 143 times price to sales valuation. These stocks were trading like they already solved global warming, cured cancer, and snapped away all the mother-in-laws. And I understand the upside here, a market that could be worth $173 billion to forecast by 2040, and really a revolution in computing that defies valuation. The potential economic value from quantum computing will be worth trillions. Buying quantum stocks right now would be like owning Microsoft at 90 cents a share in 1990, before the internet age took it to $60 by the end of the decade. This is 66 times your investment, or a 6,600% return. But that hype cycle was just too early in these stocks, bound to come down from those insanely high valuations, and here we are with 4 leaders down an average 49% from those peaks, destroying half of their investment value. Now revisiting the stocks, I have to admit I was wrong. Not on that initial hype and the crash. That was obvious as watching a 5-year-old juggle chainsaws. It was not going to end well, but that the time to buy would still be years away. Looking at the quantum stocks, the upside potential, that time to buy is right now. I'm going to reveal the best quantum computing stocks to buy, along with how to value these really long-term investments, and a step-by-step investing plan for what could be 10 or 50 times your money. But let's get started with the Defiance Quantum ETF, ticker QTUM, a fund of 71 stocks in the theme, including related products and services like semiconductors, superconducting materials, and applications. And I wanted to start with the ETF, not because I think it's the best stock to buy in the group. Scrolling through the holdings here, you're going to see a lot of companies that are only very minutely involved with quantum computing, like Northrop Grumman, along with stocks that I wouldn't touch right now, like Intel. Now, investing in an ETF, even a good one targeted to a theme, is never going to give you the kind of returns you're going to get from a single stock or some of the pure play stocks that I'll show you next. But there are 2 reasons I wanted to start with this ETF. Now, first, because despite its drawbacks, the QTUM can be a good investment in the theme. It charges a relatively low expense ratio, and it's going to give you that broad exposure to quantum computing trend, and importantly, in some stocks that you wouldn't be able to buy otherwise, like the NEC Corporation and Fujitsu, only traded in Japan. So sure, a lot of the stocks have little to do with quantum and are going to hold back the upside if the theme goes into another hype cycle, but it's also not going to crash and burn your portfolio when investors get scared of quantum. The QTUM is only down 11% from the January peak, against a sell-off of half or more in those pure play stocks. Now, more importantly though, I wanted to start here with the quantum ETF because it gives you a great way to reverse engineer this theme, to start with a list of stocks in quantum computing that you can use to research and then pick out the best. I'm going to show you those individual quantum computing stocks next, but after warning you against quantum stocks in December, this begs the question, why now? Why, with valuations still really high and meaningful revenue for these companies still out 5+ years, why do you need to start investing right now? And all you need there is one number, that $173 billion market forecast by 2040, up from just basically nothing right now. The 5 pure play quantum companies I'm going to highlight booked revenue of just $63 million over the last year. Growth to $173 billion in 15 years? That's not growth, that is a financial supernova. And while those forecasts are still more than a decade out, we're seeing breakthroughs faster than anyone predicted. Microsoft just discovered a new state of matter to make scalable quantum systems possible. Meanwhile, 2 of the companies on our list, Regetti and Ionq, were just tapped by the Department of Defense for quantum testing. Even Nvidia's Jensen Huang had to walk back earlier comments about the pace of quantum because breakthroughs are happening so fast. Now, most investors are going to wait until CNBC is screaming about this again, but by then it's going to be too late. Within the next 5 years, we will see discoveries that will launch these stocks into a new hype cycle, and you need to be ready for that. But it's not just as simple as going all in right now. I want to show you these individual stocks, then later show you how to analyze them and how to invest slowly, building your position so you are ready. First up here, Ionq, ticker Ionq, was the first publicly traded pure play company in that quantum computing space, and its distinct advantages make it my favorite of the group. To that January peak, this stock was up 600% in just 4 months. At that point, it's not a stock, but a religious experience. Its trapped ion technology offers high qubit fidelity and connectivity, a distinguishing feature compared to others like IBM and Google using superconducting qubits. Ionq's patent portfolio, nearly 400 quantum networking patents, has helped it grow quickly and sign contracts with major partners like the Department of Defense and SK Telecom. And as I pointed out last year, Amazon sees this as well, holding 1.9 million shares of the company. It's not a large ownership position, but does tie the two companies together and gives Ionq some shared credibility, along with a potential buyout in the future. And like all of these stocks, the cash flow statement here is pretty fugly, and Ionq is one of the worst, with a negative $130 million in free cash flow and just $56 million in cash to cover those needs. But with that pace of revenue growth and the high-profile contracts signed recently, the company will have no trouble raising cash, probably through zero-interest convertible debt due out years from now. And that's because even as positive cash flow is years away, it's hard to deny the pace of growth for this one, expected to nearly double revenue this year and next, for who knows how many years beyond that. More still, at forecasted sales of $85 million this year, Ionq tops any other company by a factor of 8 times. Regetti Computing, ticker RGTI, is a strong runner-up in the space with some competitive differences against Ionq. The company is unique in its full-stack approach with in-house chip fabrication as well as software development and cloud integration. That is a more expensive and difficult strategy than a more focused approach, but could mean a larger market and advantage if the company can pull it off. Regetti has also lined up some strong contracts to grow its revenue and prove its technology, including that recent announcement for the DoD DARPA initiative and a 5-year partnership with Quanta. And Regetti's cash flow statement actually isn't quite as bad as Ionq, where we saw with Ionq maybe some pressure to protect cash flow and selling of investments. Regetti is still investing heavily, seen here in this negative investing cash flow. We also see that while free cash flow is negative, the company has enough ending cash to cover about a year of cash outflow. Of course, they'll still have to turn to that same convertible debt to raise cash as Ionq, but an all in all, a little better cash position. Now for any other theme, a 30% forecasted jump in revenue would be amazing. For quantum stocks, it means Regetti has been a little slow developing products and signing those contracts compared to Ionq. That's expected to change next year with 140% growth, but there's still a big gap between the two companies' revenues. We've still got 4 more quantum computing stocks to highlight, including my favorite of the group. But if you've ever wondered what's in my portfolio, or just want to see the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. This is the app we've been waiting for, created for investors by investors, but it's more than just a social app. You can connect your brokerage accounts or just input your portfolio to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yield across the entire group. You'll also be able to join more than 250,000 investors in the social feed to see what everyone else is talking about. Now, I've shared my portfolio in the app, and it's totally free to download, so look for the special invite link I'll leave in the description and check that out. Back to our list with DWave Quantum, ticker QBTS, and its differentiating focus on quantum annealing to solve optimization problems. The Advantage system has demonstrated strong use cases, simulating magnetic materials in just minutes, and it's developing customer applications quickly. And DWave has one of the more enviable cash flow statements in the group. We still see negative free cash flow, but management did somehow still find a way to decrease cash burn from 2023 to last year, maybe some fiscal discipline there. Most importantly, the company's cash on hand of $177 million is nearly 4 years worth of that $45 million cash outflow. It won't mean no additional funding is going to be needed, but it will put it off, and the company is in a stronger position. And here, if DWave can meet that forecast for 153% sales growth this year, it'll pass Regetti in the race for total sales at $22 million. It's going to be a confidence boost for investors, and this is one of my favorite of the group. We've still got 3 more quantum stocks to watch, but you'll notice that even after that 50% crash in the group, these are still very expensive on traditional measures of valuation. If you ask me to pay 121 times price to sales on a stock, I'd usually tell you to go talk crazy on Reddit where it belongs, but here we are with investors paying that multiple on shares of Ionq, and maybe not wrong for it. So then how do you analyze these stocks that are still very expensive and with significant revenue still years out? More importantly, how do you invest in a way that doesn't crush your portfolio as that hype fades out, but still builds your exposure for when it booms back? So then analyzing these stocks of moonshot investments is all about growth and the potential market size. And we talked Wednesday about finding that total addressable market, or the TAM, something you're going to find in a company's investor presentations or industry research. This is the industry's total potential revenue when the market is developed, and it's important because very few companies ever grow to control more than 5% of their total market. So you want to make sure that that TAM is large enough that even a 3 or a 4% share would be strong growth from where the company is at right now. Now, most of the companies here use that industry research, showing a potential market of $173 billion by 2040. but you'll also find some great breakdowns, like here with Ionq, showing the economic value by each industry within quantum. So besides the fact that 3% of this $173 billion market would be $5 billion in annual revenue, amazing growth for any of these stocks, but the research helps you find those best stocks in each niche. That all means there is a crazy amount of growth coming for this theme to that quantum computing, but let me know in the comments below, what other growth trends or themes do you want to see here on the channel? With still low revenue and heavy R&D spending, debt and cash flow are going to be the biggest threats to these early stage industries. So besides that growth, you also want to keep an eye on those for survivability for quantum stocks. Now the cash flow statement for all of these is going to be ugly, but you can look for trends and then compare the stocks to find those with the best shot of surviving to that revenue potential towards the end of the decade. Here we see Regetti has been able to keep operating cash flow fairly stable around a negative $50 million annually, though its amount of spending in R&D, that investing cash flow, is a big outflow. It's been able to fund the company with financing, those forms of long-term debt that we saw on the balance sheet. Important here, though, is how much balance sheet cash or that end cash position the company has now, and how much is that relative to the cash burn each year. We see that Regetti has just over $67 million in cash left over and is burning through about $61 million a year, so obviously it's going to have to continue to borrow money to operate. And that's not a problem yet, but you need to keep an eye on that for that total debt buildup. Nation, these kinds of early stage industries and startups are the hardest investments to analyze. It's exactly what I did as a venture capital analyst, and the reason that even within the VC world, more than half of the investments fail. This study by Willamette University shows the distribution of returns for venture capital, those early stage private companies, and you see here on the far left, more than 50% of the companies produce less than a 1x return, returning less than the initial investment, and a full third bust completely. It's only with these 1 out of 10 investments that produce 10 and 30 times or more your money that produces that total portfolio return of 27% a year. So in those venture capital investments my firm was making, we knew it would be at least 3 or 5 years and even longer, sometimes up to 10 years before we could get an exit through an IPO or an acquisition of the company. But when that time came, the investments that survived to that exit would produce giant returns. That is how you need to be thinking about these quantum stocks if you're going to be investing in them. And there's no trading these names. There's no, hey, everyone else is talking about these, I'm going to buy some shares and make a fast buck. Folks, nobody knows where these are going over the next few months or even over the next year. But invest in a few of the best. Hold on to them for that 5-year period, investing a little each year, and you will make money. Arcet Quantum, ticker ARQQ, is much smaller than the first 3 stocks with just $293,000 in revenue last year and a penny stock with a market cap of just $190 million. Now that's going to mean there's less publicly available research and analysis for this stock. It could be an undiscovered opportunity, but also makes it much more risky. Personally, I think the upside is high enough in these established players, what could be multiple times your money over the next decade, but if you are a gambler, Arcet would be one of the long odds. Arcet does have one positive point here, and it's focusing on more a specific niche within quantum, in quantum safe encryption. You out there in the nation know I love this cybersecurity space, and this could be one way to play that convergence with quantum. We see that same cash flow problems here as we saw with Ionq, though Arcet doesn't have the revenue or the scale to save it. Operating cash flow has gotten more negative as the company expands, which is normal for these early stage companies, but it also looks like the company may be pulling back on investment spending to protect that cash position with that investing cash flow drastically shrinking over the last year. The end cash position is what worries me most here though. With just $18 million in balance sheet cash, the company needs to raise funds, but doesn't have the same size or competitive position to get a good deal. On the growth side, we have to take this 1,700% forecast of $5 million with about an ocean's worth of salt because it's just from one analyst. With that cash flow position and small size relative to peers, Arcet is one of the riskier of this group. Quantum computing, ticker QUBT, is only slightly larger than Arcet with a market cap of $880 million and $373,000 in revenue last year. It does have a stronger cash position we'll see next, but it's also focusing on photonics-based quantum, so trying to develop that niche within a smaller set of the theme. Operating cash flow has become progressively less negative, which could show fiscal discipline by management. Importantly here, it appears the company has had no problems raising debt with financing each year, and in cash position would cover more than 3 years of that cash burn at this point. Growth is the problem here though. Again, with just one analyst forecast, you need to back this up looking at any signed contracts the company has reported. Even on that 300% growth though, just $1.5 million in revenue still leaves Quantum by far the smallest of the group. These next stocks are the safest of the group, but remember, this entire theme of quantum computing is still years from real profits, and you need to be ready to sit through the highs and the lows. For a nearer term theme, a trend that's going to define investing over the next few years, check out the video in the corner here for the 7 agentic AI stocks getting a boost by NVIDIA. Stocks partnering with NVIDIA to dominate the trend. Next on our list aren't the pure play quantum stocks, but tech giants like Microsoft, ticker MSFT, and Google parent Alphabet, ticker GOOG. Both of these companies have announced big breakthroughs in quantum computing and are guaranteed a spot at the table when that market comes back, but they don't have the same existential risk of failure that we saw in these other stocks. Microsoft's unveiling of the Majorana quantum processor was a pivotal announcement using topological qubits, which are inherently more stable than the traditional approach. Is going to be crucial for scaling quantum computers to real-world applications. The company's collaboration with atom computing has also led to the creation of 24 entangled logical qubits using neutral atoms, setting a new benchmark in the field. For its part, Alphabet's Willow quantum chip announced its own breakthrough by solving a complex computation in under 5 minutes, one that would have taken classical computers 10 septillion years. Now, of course, the downside to these tech giants is that the return potential isn't going to be quite as high. Both Microsoft and Alphabet could see revenue boom with the advent of quantum computing, but from a base of $245 billion for Microsoft and $350 billion in sales for Alphabet, it's not going to be the kind of rocket ship growth that we could see with others like Ionq and Regetti in the space. Now, I do like Microsoft and Alphabet, but we also want a few of these pure play stocks as well. Join me on the Blossom Investing app with a special invite link below and see what 250,000 investors are talking about. Or click on the video to the right for those 7 agentic AI stocks I'm buying and why this is the biggest trend over the next decade. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.